Hi, my name is David Rutz with David Allen Capital. Welcome to our broker opportunity. This training is designed to share with you kind of where we fit in the commercial lending space, what market we're really targeting, and what type of clientele are we helping so you can be efficient in your marketing and in your independent broker business. Real quick education, in the commercial lending business, there's two types of money that exist, or two types of lending. One is called hard money, the other is called soft money. Hard money is your traditional institutional type investor, Chase Bank, Bank of America, Comerica, PNC, Citibank, all the big banks. That's hard money. Soft money is more non-traditional lenders. They're still billion-dollar lenders, many of them, or $100 million lenders, but they're not the big institutional investors like you might be used to. What's the difference? Hard money lending, just that. It's hard money to become qualified for. It's hard requirements to be eligible for. It's a hard application process. It takes a lot of time and effort. You can invest months trying to get a business loan in the commercial lending hard money space, only to find out you don't qualify. Soft money, on the other hand, is a real soft eligibility requirement. You can become approved very quickly. In fact, within a day, we can give an answer if someone's approved. You don't have to wait 5 to 6 months to see if you are, or 2 to 3 if they're really fast. You can find out in a day. Also, you could have your funds within a week, where you have to wait months over here. Sometimes businesses don't have the luxury of time to wait, even if they can get approved. So we're really focused in the soft market space, which is those who can't get approved here, or don't want to waste their time getting approved here, or just want a short-term loan, because our short-term loans are priced favorably. Where hard money is priced better per year, but they make you keep it a long period of time, which means you end up paying more than you pay through us. But you get more time to pay it back, so your monthly payment goes down. It's a lot more affordable to get a lot more money for those who can get approved. But if you're looking for a short-term loan, or you can't get approved, or you don't want to waste the time getting approved, that's where David Allen Capital comes in. Our eligibility requirements are only that the business be doing at least $10,000 a month in sales. Also, that they've been in business 4 months or more. Also, that they have at least 4 deposits per month going into their bank account, hopefully a lot more, but 4 a month is the minimum requirement. And if they've got that, and their personal credit FICO is over 500, which most people have, then they can qualify. The only other thing that kicks out a loan is the number of days with a negative balance, or an NSF. If they have a lot of NSFs, even a couple a month, they're probably going to be a high-risk candidate. And if they have more than 4 or 5 a month, they're probably not going to get approved. Okay? But if they've got a bank account that is not going negative all the time, that has a fairly decent average daily balance, they're doing at least $10,000 a month in sales, they have a personal credit score of at least 500, which is most business owners, and they've been in business at least 4 months, we can probably get them approved. You put those eligibility requirements at hard money, they're not going to get a loan. They're not going to come close to getting a loan. Okay? But we can get them a loan. Now, our lenders believe that entrepreneurs and business owners, if given a loan, can turn that money into a lot more than the interest cost. So they're willing to take a gamble or risk with business owners who have cash flow coming in every single month. See, these are cash flow based loans rather than credit score based loans. If you have cash flow coming in, or your client does, we can get them a loan. Typically, of course, they have to meet the other requirements, but typically the loan amount will be equivalent to what they're doing in monthly sales. So if they're doing $10,000 a month in sales now, they could generally get approved for about $10,000. If they're doing $100,000 a month in sales now, they can usually get a loan for about $100,000. So it's just a rule of thumb. Sometimes it's lower, sometimes it's higher, but the rule of thumb is what they're doing in monthly sales is what they can get approved for. Now, when you're going forward and pricing this, the pricing of the loan, we don't talk interest rates because that's really misleading. What's the interest rate? What do you pay for a mortgage that costs you 3% a year? You say 3% a year. Yeah, but over the course of the loan, what did you pay for that mortgage? You borrowed $300,000, you may pay back $700,000 total. It's a lot more than 3%. So we like to talk price with business owners. We just get right to what it is going to cost. On average, our loans are 1.2 to 1.3 times what they borrow. Okay, so if they borrow $10,000, they're going to pay back $12 to $13. If they borrow $100, they're going to pay back $120 to $130. So it's 1.2 to 1.3 times the loan. However, if any of the areas are higher risk, then it goes from 1.2 to 1.4. Okay, so now you could be up to 1.4 in your factor. So now 100,000 may cost you 140 because there's some things that cause concern. Now, if you're high risk, whether it's industry, whether it's you've already got loans like ours, whether you've got some NSFs, that you're having real struggles in your business financially, meaning your cash flow is really low, your average daily balance is low, they may charge you 1.4 to 1.5 times the loan amount. So the rule of thumb is 1.2 to 1.3 times the loan amount for good clients. 1.3 to 1.4 for the higher risk, and 1.4 to 1.5 for the highest risk. Now, let me give an example of when someone would want to take a loan even at the highest risk amount. Let's say you have a restaurant that is filled to the gills every single day. And they've got the ability to put a patio on the back of their restaurant or in the front of the restaurant, and it's going to cost them $30,000. But they're a super high risk. And they get approved for $30,000, but only at a 1.5 rate. So they'd have to pay back $45,000, or 30,000 times 1.5 is 45. They'd have to pay back $45,000 for that $30,000 loan. And maybe they only get to have that money for 9 months. So they'd have to pay back $45,000 in 9 months on that $30,000 loan. Some people may say that's crazy high. And for some people it is. But for that restaurant owner, they may say, wait a minute, I can generate at least 30 to 40,000 in extra revenue every single month just by having that patio. I need the money to build the patio. And they bring in a lot more profit than that 15,000 in interest that's spread out over 9 months. Okay, so we don't like to judge who should take what loans. We get the best loan offers we can for our clients. We're always looking for the lowest factor, 1.2 to 1.3, sometimes even lower than that. But sometimes we get a 1.49 or 1.5 times because that's the best offer we can get that client. And certainly, we want the client to know you're going to pay a lot of interest on this. But many times they want it anyway. In fact, most times they do want it anyhow. Okay? Regarding fees, fees are generally under 2.5% of the loan amount. For good clients, it's 0 to 2.5% of the loan amount. If they borrow $100,000, they're going to pay $2,500 in fees, and it's deducted from their loan. So, in other words, they get approved for $100,000, they accept it. There's 2.5% loan origination fees, let's say. That $2,500 off the 100 would be deducted from the $100,000 when it's wired to them, so they would only be wired $97,500. What's the net result of that? They never have to write a check for the fees and give you a check or give us a check. David Allen Capital charges 0 fees. Our lenders sometimes, not all of them, depends on the lender, charge origination fees of 0 to 2.5%. Now, a higher risk client could be charged up to 10% fees up front. So again, if someone borrows $20,000, let's say, and they're a high risk client, they may be charged $2,000 in fees. And it's charged up front, deducted, so they'd only get $18,000 wired to them, yet they're paying back on the $20,000. Okay, so again, we disclose all this. I'm giving you worst case scenarios. The highest risk customers are going to be 1.5 times the loan amount, and the fees are going to be up to 10%. Now, those worst case scenarios, of course, we're always competing on your client's behalf. And sometimes clients want that money, sometimes they don't. In the end, we can get them money so they have a choice. We're getting them money in places other people just can't get them approved. Whether they've got bankruptcy or tax liens, we can get them loans. If they've got 2 loans like ours already, they need a third, we can get them a loan to consolidate them all. If their revenue is there that justifies the loan, we can get them approved on the loan. Many different situations, we can find ways to get them approved. So hopefully this has helped you understand the lending process a little bit better. They're going to get approved for about what they're doing in monthly sales, generally. The factor is going to be 1.2 to 1.5 times what they borrow. Of course, 1.2 to 1.3 is if they're a good client. 1.3 to 1.5 is if they're higher risk. They only need to be doing $10,000 a month in sales, 4+ months in business or more. We need, in our package, we need an application, bank statements, merchant processing statements, driver's license, voided check, and last year's taxes. That's it. That's soft money lending at its finest. Not hard money, where they'd want balance sheets and cash flow statements and every owner's business plan and use of funds business plan and 10-year projected revenue statements and all kinds of things that you end up spending a whole semester of college putting together, even though you've been out of college for 5 years or 15 years. So hopefully this has helped you understand the difference between hard money and soft money. We're in the soft money space. We can help get them approved. And we're happy to have you aboard with David Allen Capital. Any questions about this video, watch it again. Talk to the person who enrolled you into David Allen Capital. In worst case, email support@davidallencapital. We'll get you answers. Thank you for watching. Go make it happen.